afternoon. My name is Lisa Padmore. I am the Chief Executive Officer of the Institute of Chartered Accountants of Barbados, or ICAB, and this is Talking Business with ICAB. The Government of Barbados' budget, setting out the estimates of expenditure and revenue for the financial year 2024 to 2025, was laid in Parliament on February 20th, 2024, together with a projected forecast for the current financial year 2023 to 2024. These formed the basis of the parliamentary debate from February 27th on the Appropriations Bill 2024. The Appropriation Bill expressed the estimates of revenue and expenditure under a cash basis and under an accrual basis. Accrual basis and cash basis are two different methods of recording financial transactions. The cash basis of accounting records revenue and expenses only when cash is received or paid. The accrual basis of accounting records revenue and expenses when they are earned or incurred, regardless of cash flow. The accrual basis of accounting provides a more accurate picture of an entity's financial performance, while the cash basis of accounting is simpler and easier to manage. The accrual basis is the basis under which the financial statements of government are recorded. The Public Finance Management Act 2019 confirmed the earlier decision to adopt International Public Sector Accounting Standards, or IPSAS, as the basis under which public sector financial statements are prepared. On the other hand, the cash basis is used for reporting under the Barbados Economic Recovery and Transformation Program, commonly referred to as the BERT program, to the International Monetary Fund. Today's episode will not debate the figures in the Appropriations Bill, but seek to provide some insight into the process of creating the figures that are disclosed. So let's start with the revenue. Regardless of the method of accounting, revenue consists of tax revenue, non-tax revenue, and grant revenue. Revenue is then used to purchase goods and services for operations, as well as capital purchases, to pay payroll for public sector employees, and to make principal and interest payments on government debt. Revenue also is used to pay transfers, which are payments of money for which there are no goods or services exchanged, and some examples of these transfers would be retiring benefits for former public sector employees, grants and subventions to non-governmental organizations. Government's estimates are projections, and in 2024, the Government of Barbados is projecting a deficit of $263.1 million on a cash basis. The government is also projecting a primary surplus of $445.9 million on a cash basis. A primary surplus is comprised of current government spending, that's current income from taxes, and excludes interest paid on government debt. So if a country has larger levels of income relative to current spending, it is said to have a primary surplus. But if a country has larger levels of current spending relative to income, it is said to have a primary deficit. So a question you may have is, how will the government fund the deficit? Well, government's deficits are typically funded through a combination of borrowing and revenue generation. So some examples will include government bonds. And governments issue bonds, which are essentially IOUs to investors and institutions. These bonds come with a promise to pay back the principal amount plus interest at a future date. There are also treasury bills, which are short-term government securities that mature in less than a year, and they are typically sold at a discount to their face value and redeemed at a full value upon maturity. For example, a treasury bill with a value of $1,000 can be sold to an investor for $950 cash. The investor would then receive the full $1,000 at maturity. Governments may also borrow from international financial institutions, such as the International Monetary Fund or the World Bank, or even from other governments. Another option that is available to governments includes central bank financing. So in some cases, governments may borrow directly from their central banks, although this practice could lead to inflationary pressures if not managed carefully. And finally, governments can also fund deficits by increasing tax revenues or implementing other revenue-raising measures, such as selling assets or increasing fees for government services. So these methods would allow governments to cover budget shortfalls, and finance expenditures that exceed their current revenue level. However, relying too heavily on borrowing can lead to concerns about debt sustainability and may have long-term implications for financial stability. So we expect to hear soon an announcement regarding the timing of the 2024 budgetary proposals from the government, in which they may use a combination of the previously mentioned examples to manage the deficit. We will wait and see what is proposed. I'm Lisa Padmore, and this is Talking Business with ICAB.